My lack of education hasn't hurt me none. I can read the writing on the wall. Chrome, give us those nice bright colors. Give us the greens of summers. Makes you think all the world's a sunny day. Oh yeah, I got a nice.
Well, good morning. Happy Mother's Day to all you mothers out there, especially Star Pack and Yom and anybody else I missed. Hope you have a great Mother's Day today. We're going to go over some trades, take a look at how far we've got on this AI move left. If anything, I think we're probably in the between the the sixth and the eighth inning yet. But as I've been telling people, when we get a drawdown, it's going to be wicked. And my hope is that we get a nice drawdown, 8 to 10%, and be able to go in and buy some of this stuff at a discount. And all right, let's just take a look at the overall market. Last week we had macro data. This is Citibank's economic surprise data. Continues to surprise to the upside. However, what the Main Street is not feeling it. Sentiment, okay, is much higher on Wall Street than it is on Main Street. And while this, separation has occurred before, certainly Main Street's telling you that inflation is starting to hit their pocketbooks. Does that mean we go into a recession? I think a recession is very possible this fall. And that's in a normal market environment. Of course, we have the great orange idiot in office, so I don't know what's going to happen there. I just read this morning that Iran responded in writing, but they only want to talk about opening the Hormuz Strait, blah, blah, blah. At the end of the day, the issue is oil and will remain oil. And there is no way that oil, they're draining, countries are draining their strategic reserves. At some point, those reserves will run out and they will have to go to the open market. I think that there is this general belief and hope, but belief that the war will be over, oil will drop, and in doing so, they'll be able to refill their strategic reserves at a much lower price. I'm not an oil trader, so I don't really offer an opinion of that. But let's take a look. Yeah. This is dated Brent versus Brent futures. And you can see that the dated Brent, continues to be, oddly enough, okay, there's no pressure on the futures price, but there has now been reports that China is flush with crude and has been reselling to its Asian and European rivals. So that could also be helping to suppress the price of oil. I know that it's being suppressed artificially in the futures market without going into details on it. The futures market continues to be anything but futures. Derivatives are an excellent way to manipulate the price of the underlying. I've said that before. We've seen that with Bitcoin. We've seen that with the VIX. We've seen that with oil. We've seen that with interest rates, everything. Okay. The one thing that I'm looking at here is oil volatility continues to remain stubbornly high. And typically oil and the VIX move, together. And so there is a demarcation between the VIX and oil right now. And at some point, the market will, the market doesn't like when one side of the boat gets too heavy. And right now, with the put and call skew where it's at, where there are almost no puts being bought and it's almost all calls, as I've shared with some of my members in a one-on-one meeting, this rally has been entirely mechanical. It's not based upon an improving economic outlook. The rally started. There were a lot of shorts that were put on, especially in the tech sector, as they were bought back and forced buying. The price of the S&P and the Qs entered a negative gamma zone, which accelerated the move upward. Okay. U.S. equity markets are now up 6 straight weeks, led by the Nasdaq's massive outperformance, and only the Dow ended the week in the red. The prior longest streak, by the way, was a 6-week streak in September of October and before of 24, and before that, it was 9 weeks in November, December of 2023. Bloomberg's Michael Ball explains that equities have been able to absorb Iran oil flow realities because the rally has been, what did I just say? Mechanical. As equities rose, volatility fell, and the market forced the under position to chase, which has created the current feedback loop, which is higher equities, lower volatility, more call demand, and then just repeat it. Nomura framed the crash up like this. This is a pro-cyclical forced leverage buying, not conviction in a broader organic bull market. This is apparent in the quality of the rally, with earnings revisions being positive but narrow. Breadth remains a disaster. Okay. And this is the skew which put the call. And you can see that if there were a lot of puts being bought, you'd be way up here, right? And this is evidence there are very little in terms of puts being purchased right now. This is the S&P index in terms of breadth. Percent of members above the 200-day moving average, okay, about 56%. And this is the actual index itself. So it is not a broad rally, but it is getting broader, okay? Goldman saw Friday that activity levels were 4 out of 10. And again, long onlys were skewed 8.6 better for sale, where they were selling macro, industrials, and financials. Hedge funds were skewed 4.8 better to sale, with supply in energy, utilities, and communications. And what does that tell me? I think they're selling to get onto the bandwagon of memory and tech. That's why I think the selling's happening. They also, Nomura also, or Goldman also comments that buybacks and retail are primarily keeping this dream alive. I don't think so. I think we have strong institutional buying going on too. Semis are up 10% for the week, which is the 6th straight weekly gain. However, when we take a look at the RSI on AMD and SanDisk, weekly RSI is now at near record levels of being overbought. And the last 2 times this has happened. Okay. Went from 40 down to 15, 32 down to 15. Now, I want to pause here because I think there's something that people, when they compare it to the bubble of 99 and 2000, at some point, yes, there's going to be all these hyperscalers that at some point access to large language models, the cost will come down, it will become commoditized, right? Same thing that happened with routers and switches and networking gear that caused the bubble collapse then, as well as internet service providers. The the leaders or the pioneers of the industry always do well, and they will continue to do well. And their stock prices will continue to do well. But at some point, there will be a pullback because everything in the sector can't possibly succeed. So right now is the fun time in the market where you just sort of get to ride things moving up. But ultimately, I think that we're going to see a pullback. I think that pullback is going to be an excellent entry point. And until we see that, as I've said, we're playing with fire. Now, the overall model account was up, I think, over 4% last week, even with the losses I took. And our Fight Club members, I put out a trade in the afternoon, early afternoon, to get into DRAM, re-enter it. And I think some people were up, 25, 30% at the close. I am looking to add to that. That is something that I think there's a lot of excitement behind. There's a lot of money flowing into it, and it's a hot sector. What's going to make it even more hot is Thursday's IPO that's coming of Cerebras, not Cerberus, which is They have one product. They make a massive chip that goes into their massive PC, but it's supposedly 20 times oversubscribed, as well as they're pricing at the high end in the 125 to 135 a share. So I think that, and we've got Nvidia earnings this week, we've got Kevin Warsh taking over this week, and so all these, I think the market's going to be talking about, hey, every time that a Fed chair comes in, the market drops. Yeah, that could be true, but this time it could be different because I think AI is still fundamentally misunderstood in terms of the impact it's going to have on um, just purely economics, right? We're very early in that stage, though. So, again, I don't know what the trigger will be, but the market has grown thick-skinned. There has not been, well, there's been shooting, but I guess Trump and the geniuses to be in the Department of Defense said that, it's not, it was just a love tap. And so it wasn't the end of the ceasefire. I think that we have now entered into the political stage where there's going to be negotiations and more, barring any major military action, even though we have Netanyahu out there chirping off that he wants American forces to go in and get the uranium. He should just shut the fuck up and go himself. But anyway, Israel's the wild card. Okay. If Israel decides they want to launch an attack and create havoc, they're going to do it. They're going to do what's best for them. So that to me is a tail risk. Other than that, though, I think the market's going to continue to go up and climb a wall of worry until that time when the market starts looking towards earnings and looking towards the economic picture in the US. And it's not great. I mean, consumers are spending, but they're getting to the point where they're tapped out. McDonald's commented that they've seen customer pullback in terms of the numbers because people are choosing not to go out to eat. I think that that's going to continue. I think that's why consumer discretionary stocks continue to get hit. But at the same time, there are those companies that are just going to continue to go to do very well, irregardless of the overall economy. If you follow the money, okay, and I'm always doing that, follow the money flow. Look, there is hundreds of billions of dollars recommitted into the tech space for hyperscalers. That money is going to continue to juice those companies. Yeah, there's going to be a day of reckoning someday when the market decides, hey, you all need to start proving through free cash flow or actually having growing revenues instead of borrowing money. You need to prove that you are a profitable and successful business model. One of the things that I saw during the earnings season was, yeah, we had really good earnings outlook in terms of future earnings increases estimated, but I think 81% of them came from the tech sector. So it was very heavy into AI and memory. I don't see that the memory demand for memory is going to collapse anytime soon. I think it's going to be one of those everything all at once events where the market decides to trade off of. And I don't, here's what I think we're going to get a pullback. It's going to scare people out. I would like to add then, and then the market's going to go and make new highs. And so until and unless I see the market um, participation broaden out, okay, and that might happen on the sell side, or I see or sense that the market's pivoting away from the AI tech story and starting to look at the overall economy, I have to remain long. And even when it does that, if you think about it, the AI tech boom is not, although it is part of the overall economy, it is such a unique situation with so many unknowns, productivity gains, job losses. There's so many unknowns in it that with there, what I continue to look at in terms of a benchmark is money flow. There continues to be and will continue to be a crap ton of money that is flowing towards these companies. What are some black swans that could occur? Oh, a major memory company having a or not a major memory company, a hyperscaler, a direct related hyperscaler business having failing. That'd be one. Um, if somebody releases a large language model that doesn't need the compute power. That'd be number two. Um, but looking at SK Hynix and looking at SanDisk, and they're saying SanDisk is saying that I think they're sold out. So there is so you've got two competing forces. You've got energy, which we are in with the EOSE, and then you have this AI hyperscaler. Right now, I think we're probably, like I said, in the sixth to the eighth inning of it, and I intend to profit from it. But when the reversal happens, it's going to be really painful, primarily because the structural side of the market is so unbalanced. There is very little put protection, so that will accelerate any down moves. So the good news on that is I don't think it'll be a long, drawn out pullback. I think it'll be very quick. So software surged again for the fifth week, over 5% last week. Let me get to this first. This is the volatility index. And what's interesting on the volatility index, by the way, is single stock volatility is much higher than index volatility. So does that mean that this will close? Yeah, it will. And I think it's going to close to the top side. I just don't know where and when. But this is, you have to, if you accept the fact that this rally has been structural, that there were the market participants were overly short, they got caught, and now they're driving the market up because of this persistent call buying. If you accept that fact, then this is artificial. At some point, this is going to go up. It's literally inevitable. And the trick is obviously is to catch the right time, but that's why I've been putting verticals on. Let's take a look at some specific things in terms of software. Let's take a look here. All right, so we've got software shares, which are, excuse me, which is the white line, are still way behind the Mag 7 and way behind hardware. Okay. So if there's a sector that, and I want to get long that on Monday, IGV. That's, I think, where money is going to flow, because I think that the reported death of software as a service was overdone. When you have Jensen Huang coming out and saying service now, who everyone thought was going to go out of business, when he says they're one of the most important companies in the AI sector, I think that's a pretty good tell that these SaaS companies are not going to be going out of business. US software continues to explode to the upside. It took out this negative trend line, excuse me, and the 88 resistance level. And it's also pretty impressive that the sector managed to close up on Friday despite Cloudflare, which was down 24%. That's a big component of the index, and yet they were down 24 and the software continued up. Software also was among the most bought industries over the last 5 days. And so far, all this has been is short covering. But look at this. This is short selling. There is a lot of short covering that needs to be done. I think that software is ripe for a squeeze, and maybe it'll be NVIDIA that comes out, and Jensen Huang talks about NVIDIA and says, hey, I think, this is, software as a service. That's all he has to do, by the way, is mention something like that. Let me get back to my charts. And the market will fly on that. So, okay, some of the stocks that we're looking at, EOSE, I was looking for a close above this high, which is 807. It was not able to do that. We've got earnings this week too, so I can't trade in front of earnings. What do I think? Look, these guys announced a deal. The stock, I think the stock should be over $10 right now. But if they announce a deal, the stock's over $10. There have been some rumorings. The people on Twitter have been putting together pieces that certainly or not certainly, that they think the New York deal is going to be awarded the EOSE. We'll have to wait and see. Friday was a very strong day overall in the market. Some of the other things, obviously IGV here. I'm waiting for on IGV that 91.98 to break. Hold on here. Make it to a 1 day, 1 year. There we go. We have a lot of room on this trade. Okay. I am in DRAM. Here is DRAM. We had a massive day on Friday. Do I think that's going to continue? I do. I think that's going to continue. I'm in the position where I wish I had bought more already. Mag 7 breaking out. I'll be taking that trade. Also, watching space. Why? Because we have the largest IPO coming up in a month or so with SpaceX, and I think that will catch a bid. Uh, I'm in the VIX trade, which is, oh, here's another one, VELO. I'm watching this for the break. I'm watching wheat for a break. So I've got a lot of trades that I'm watching that I'd like to get into right now. Another one I'm watching is IWM, which are the small cap market. Okay. We had a little bit of a pullback. This was a bearish engulfing, 50% retrace, so there could be more down move in it. But I think it's difficult, or I don't think it is difficult right now to trade purely off of price action, only because the market remains very attuned to both headlines as well as this enormous imbalance in call buying. So it's not a normal functioning market at this time. INV, yeah. I mean, these are wild moves here, people. $7.45 down to 622. That is wild volatility. I'd like to get into INV above 745. We had PCT breaking out. Okay. Again, defined channel, a breakout here of 978, but this probably is going to be short-lived, by the way, if really what is going on is that dash for trash. The other area that I'm looking at is gold and commodities. I think gold and commodities are going to, if we get into a inflationary environment, I think gold and commodities will do well. We tried a couple short-term trades on rare earth minerals. We tried, I think, nuclear also. So I am watching other sectors and other industries. Just it's for me, I just can't pull the trigger. I got to wait for an actual price break before I can get in. Michael Hartnett from Bank of America lists materials as one of his top bull themes going into this end of the summer and fall. Still waiting for a break. I'm looking at MP, which is one of the leaders in the sector. But emerging markets, materials, gold, software. This is where I am looking at buying when the prices actually get to the point where they are breaking out. Here is an interesting chart. This is steel. This is the steel ETF. And this is how far back this goes. Okay. This is, let's keep going. There it is, 2008. Steel is about ready to break the 2008 high. Okay. Which makes very good sense because you've got a shit ton of infrastructure being built out for high tech, specifically hyperscalers and all of that. So, okay, let's see. Looking at flow data, cash, we had in the last 2 weeks, the largest since 26, bonds, largest since 26, emerging equities uh, had the largest outflow since January 26. Chinese equities, largest outflow, sixth week of outflows. European equities, fourth week of outflows. Right now, America is the hot market. I am watching, by the way, the QEB as well as Brazil. 1 second here. QEB, I have an alert here for breaking a 31.49. I've got EWZ, which are the Brazil shares. I have an alert here for taking that out and going to the top end of the channel. So I'm back. We are back to trading normal volume, not normal volume, normal number of candidates, but I'm not back to trading 4% yet. Although I do expect my DRAM trade to be at 4%. I'll have to wait and see what we do. Probably a midday trade unless it really just takes off. Um, I look, if you're going to invest in these, you got to understand something. You're going to trade these. The drawdown could happen for any reason at any moment. And when it does, it's going to be a wicked drawdown. Okay. So I think that it's important to keep in the context that while we're making money on these trades, um, that we could also take some pain on it. Now, I accomplished what I wanted to accomplish, which was last week get some trades in and get a profit cushion for the for the upcoming pullback. I don't know when that's going to be. I mean, we could be sitting here talking in July and there's still no pullback. Remember, markets go up on a wall of worry. Okay. And I think certainly that's what's going on. No, it's unbelievable. It's been unbelievable to me. But I followed my plan, which was I waited. I said I wanted 3 days of no shooting. We got a week, and then we started going in, and we're going to continue that. Now is the time to trade. Okay. I'm going to continue to trade this until and unless I see that the headlines, last week the market pretty much ignored Trump. And as long as that continues, I'll continue to trade this market. So I look forward to being with all of you in the boardroom this week. If you have any questions, please let me know. And again, I hope that all the mothers out there have a wonderful Mother's Day. And I'll see you in the morning.
Sweet imagination. And everything looks worse in black and white.